Good morning, everyone. It's Friday, October the 8th. Just going to run through the charts and show you guys the early morning blip we're getting here with the non-farm payroll news that just came out. Here we've got the price of gold on the Kiko overlay chart. Yesterday we had pretty much a run up to a new high, and then we saw some very sharp selling, and it broke through a pretty key support level, which is around the 1350 area. And then it pretty much flatlined for the rest of the afternoon. This morning we saw it continue to shake a little bit lower, and then we got the non-farm payrolls. It kind of paused just a few minutes before it, as everybody was anticipating or waiting actually for the news to happen. Of course, non-farm payrolls was worse than expected, so it has helped bring gold right back up into pretty much a key support level, which is around the 1350 area in here. And I'll just show you that on the intraday chart of gold here. Here's the 60-minute chart of gold. You can see yesterday's big sell-off, and we pretty much had a downward kind of choppy channel this morning and through the night, and the non-farm payrolls helped boost it right up, but of course it's right into key resistance here, which is why that's its first stop. We might see it continue to push up. This move up might have a lot of people thinking they're going to jump in for the next move up in gold. Of course, yesterday was a big reversal day. It's not the type of day you want to go long right after. It signifies a reversal to the downside, so any move up here is likely going to be sold. And I mentioned yesterday that I'm looking more or less for the price to work its way up either to the 1350 area or up near the highs again, form almost a double top, and we might see it go back up there today, and then we'll see a reversal. Usually when you get a breakdown, you'll get a test of the high or of the breakdown level. So it could test here or it could test up here. We'll need to see how it unfolds with volume through the day. Of course, with the news out this morning, you always get a blip. You can't really take these seriously. Within half an hour or an hour, this could be completely reversed and go the other way. So you got to be really careful trading around big news like this. But of course, we'll take a look at the daily chart. You can just see we had the reversal candle yesterday, and now we're just kind of going sideways. We'll have to see how this plays out over the next few days, see if it becomes more of a bullish pattern and a consolidation, or if it's showing signs of further weakness and light volume drift up, forming a double top or something like that. We'll have to just play it by ear and watch it unfold. Now, if we take a quick look at the US dollar this morning on that news, it hit the US dollar. This is a 60-minute chart past 4 days. This morning, as soon as that news came out, the dollar started to slide, which is what really helped push gold up, and it's also helped push oil up, which I'll show you in just a minute. But pretty much with a falling dollar, we get rising commodities and a rising equities market, and that's pretty much what's happening this morning. You can see yesterday we had that reversal candle, and now we're getting a pause here. So will it be interesting to see if the dollar can hold up and eventually start to climb its way back up. But as of right now, it's just pretty much paused going sideways, so we'll see how that plays out. For crude oil here, you can see this is the past 4 days also. Yesterday we had the big reversal down. This morning it slid a little bit more with some follow through as investors and traders see it happen overnight, and they get out of their positions in the morning, which is what we get some more follow through here, which is what I pointed out yesterday somewhere over here. I said probably get some more follow through, and then we might see some type of low volume test back up, similar to what's going to happen in gold, silver. That's what I'm expecting anyway, but we'll have to just let that play out. Anyways, it's moved up with a falling dollar, and that's about it for that. As for the SP 500, you can see we had the big rally there earlier this week, and then it's pretty much chopped sideways. We had that a big blip yesterday, and it sold back down. And through the night, we saw futures drift up, and then they drifted right back down. We got the non-farm payrolls, and we got the US dollar dropped, and it's really helped boost equities here. But we're pretty much trading within a key resistance level, which is right up through this area here. So it's got a lot of ground to clear. It did spike up pretty quick, but it is pre-market, which means it's easy for price to drop and spike on this news. It's why we get these big blips, and very dangerous to day trade large positions around this news. It's better to wait a few minutes after at the minimum. But we did get a nice spike down this morning, came right down to the 200 period moving average on the 60-minute chart. which I do like, which I think would have been actually a good point to pick up. But of course, it did that literally in a blink of an eye. Almost came down and tagged it. Usually, I like to see it tag it and pierce it, and then it'll rock it up. But it didn't quite get there. But it was a nice pullback this morning, and now it's moved up. If we take a quick look at the daily chart of the SP, let me just flip this. Okay, take a look at the daily chart of SP 500. You can see that pullback actually came down to the 10 period moving average this morning. Of course, it was just a quick blip, nothing we could have really caught. It didn't quite catch the 200 period, and just came down and almost touched the 10 period. But pretty much we're getting a sideways consolidation, and it'll be volume. It'll be Friday light volume session more or less. I mentioned yesterday we might see a little more volume today than normal, simply because non-farm payrolls and because yesterday was a reversal day for the dollar and some commodities, so that might stir up a little bit more trading today. But overall, Fridays are usually light volume day. We usually don't see a huge down day or an up day. It's usually just relatively calm. But we might see an afternoon drift up into the close. That happens quite often, quite frequently. We'll see it just from usually 3 o'clock on. We'll see a slow and steady drift up and close up near the highs. But other than that, there's not a whole lot going on right now. I'd like to see more of a pullback or more of a sideways pause here to possibly test the water and take a long position. The sentiment surveys are showing more people are getting bullish. The majority of people are really bullish here. And while that's a contrarian indicator and it kind of signifies we're getting near a top, the market has that feel and look to it as it did back in December of 2008 and March of 2009, or sorry, 2010. And of course, when people start to become really bullish, they can have an overpowering effect and continue to grind and chop it higher, and it could go up for several more percentage points. So do have to kind of play it by ear, but we'll see what plays out today and what happens Monday. And if we get a pullback, I'm going to take a small long position. Nothing serious, just a small one to get into the game here. And if we get a slow chop and grind higher, then we'll just move our stops up accordingly with the moving averages, and we'll go from there. If we get a pullback and a close below them, then we just get out and we wait for the breakdown and the retest, and we'll possibly be taking a short play for a ABC retrace. Anyways, that's it for now, and I'll talk to you guys in a bit. Bye bye.